Hey everyone, what's up? This is John Cook with Frontrun Money. Today is February 20th, 2024, and I want to talk briefly about the Bitcoin ETF and the upcoming halving and the potential impact on BTC, the asset. Like, for those that don't know, who don't read the Substack, I've been in tech and finance for, I don't know, man, 15 years now. Undergrad was comp sci, got an MBA. I've done a lot of things, and been around the block, and what I've noticed as price assets move up and down, like the broader investor and speculator community tries to find narratives that justify the asset's price movement. It can be crypto, it can be Bitcoin, it can be Tesla, it can be gold, it can be like any freaking thing in the world that has any upward or priceward down movement. So, with like Bitcoin's market cap hitting $1 trillion uh I think 3 days ago, and the BTC price just passing $53,000 USD. There's this narrative that I see on like crypto Twitter and all like these really popular crypto blogs that I follow, like Bankless. I'm a premium subscriber. Great content, by the way. I'm not knocking them at all. But like the general thesis is that like Bitcoin's price movement is a function of the BTC ETF getting approved maybe 30 so or 30 40 days ago. Or said another way, Bitcoin is going up in value because the Bitcoin ETF has created an environment where new investors, these are like the TradFi boomers, have the opportunity to buy Bitcoin, thereby increasing the overall assets price. That's part one. And then part two is the upcoming halving, which historically has had a strong correlation with upward movement in Bitcoin price. You put these all together, and the general sentiment is that Bitcoin's price is going up. Like that's the pitch. So, is it really? I mean, Bitcoin's price is going up for sure, but is the Bitcoin price going up as a result of the ETF? I don't think so. So, over the course of like the next couple of minutes, we're going to try to figure out like how the Bitcoin ETF has impacted actual price movement versus speculation, and then we'll talk about the halving too. So, for those that don't know, like, what is the Bitcoin ETF? Bitcoin ETF is an investment vehicle that gives individuals in the TradFi ecosystem access to BTC, the asset, without having to go into like DeFi land or open up a Coinbase account. So if you're like a boomer or somebody that just wants exposure, or even like an institutional investor that wants exposure to Bitcoin, the asset, without having to go into crypto land to like take custody of your keys and go through all that stuff, the Bitcoin ETF represents a vehicle through which you could do that. So if your mom or dad like wants to buy Bitcoin but doesn't want to like manage their keys, they could go to like Fidelity and buy the Bitcoin ETF. Cool, right? I mean, it is cool. Like it's an opportunity for to get, new users exposure to like the crypto ecosystem, but I mean, if you think about this like just logically and take away the emotion and the narrative, Bitcoin has a $1 trillion market cap. Like it hit the 1 trillion market cap as of February 14th. Cool. That was 6 days ago. So the question is, how much of that market cap's increase is the function of the Bitcoin ETF? And the answer is, I don't think a lot. Like, I think the narrative is a big play. But for example, let's look at like the inflows of cash to the Bitcoin ETF. I use Chat GPT because I'm kind of lazy. So I typed into BTC, I typed into Chat GPT, what are the BTC inflows over the past 30 days? It gave me this really long response. I don't want to read this. Make this shorter. Bullet points. I am live streaming. Ha ha ha. So let's see what Chat GPT comes back with. Cool. So you can see that according to ChatGPT, with and this is like internet connected now, so the data is live. BlackRock ETF IBIT reached over 100,000 BTC in the past. Uh, yeah, Bitcoin IBIT ETF 2600 BTC on January 11th. That's not the right one. In the past 4 days, covered by the data, Bitcoin ETFs. There it is. Bullet point number two. Saw an influx of 43,000 BTC, valued at $4.3 billion, indicating a surge in adoption and investment. How funny is that? That like Chat GPT tries to provide like sentiment based on actual price movement. Just report the data, dude. Okay, so there's a Bitcoin ETF. It gives TradFi boomers the opportunity to get exposure to Bitcoin without having to take custody of their own keys. You can see that according to this data set, we have seen a net inflow. This is buy pressure of BTC of approximately $2.3 billion. Cool. $2.3 billion of demand is now entering the Bitcoin ecosystem. Is that why BTC went from like 30,000 to 50,000 over the past, couple of months? No, because think about this. Okay, think about this. The Bitcoin market cap is $1 trillion. So if you enter a buy position of any asset, I mean, take away the zeros, 2 billion into 1 trillion, does that produce like a 70% increase in price movement? No, like the numerator is too small. So like that common counterpoint, or I hear from people who don't agree with my point of view is that, well, John, about 70% of the Bitcoin is dormant, and therefore the denominator, which is the number of BTC available to trade, is not actually 1 trillion. It's like 300 billion or something like that, right? I pulled some data from like CoinDesk, and you can see that Bitcoin supply inactive for a year hits a record high of 70%. So that means 70% of Bitcoin's circulating supply, which is probably like 17 or 18 million, has not moved in the past year. It's probably like centralized exchanges, maybe like the US government, and probably some whales. So if Bitcoin hasn't moved, if 70% of the total Bitcoin market cap hasn't moved in the past year, that's 70% of 1 trillion, that's 300 billion. Okay, that is liquid and is tradable. I'm doing this on the fly, so humor me, but you can see that of the total available Bitcoin in circulation, it's not actually 1 trillion, it's 300 billion. So you might say, okay, there's $2 billion of buy pressure against an asset that has 300 billion dollars of liquidity available. I mean, just think about that logically. Like just think about that without like going to the narrative like Bitcoin as the store of value, the future of money, all that great stuff. If there is something that I can buy 300 billion of, and I take 2 billion to buy 300 billion, is that going to increase the price of that asset by 1 2 5 50 70%? No, it won't. It won't. So what was the price of BTC 60 days ago versus today? So we can see that, let's see what this comes back with. I think it was maybe 38,000, 40,000, but I want to be like clear in what I'm about to say. Let's see if ChatGPT works. Bro, you're killing me. BTC price 60 days ago. Okay, BTC price 60 days ago. BTC price 60 days ago, which was let's look this up. December 2023. Yeah, let's do 1/12/20 to 2/20 today. What do we have? Cool. Oh no, that's, man, I feel like a boomer right now. Why is this taking so long? So if I compared the price of Bitcoin from What the fuck is this? Cool. That hits the apply button. Excellent. Bitcoin 30 days ago was $42,000. Today, Bitcoin is 52,000 dollars approximately USD. And the total addressable dollar denominated Bitcoin available for trading, which is classified as BTC that have moved in under 1 year, is about 300 billion. And then there's about $2 billion in buy pressure since the Bitcoin ETF came into existence. My theory is that $2 billion of buy pressure does not impact $300 billion of an asset that's available for trading. You can see that. I just don't think it's there, guys. I mean, I think what's actually happening is BTC is becoming a collateralized asset that's used for like leverage long and leverage short positions. So what that means is like I take one Bitcoin, I go to like a decentralized exchange. You can do this on Ethereum pretty easily. You wrap the Bitcoin, it becomes wrapped BTC. You use that as collateral to borrow USDC, and then you can buy more Bitcoin. So let's say, for example, $50,000 of Bitcoin becomes collateral. I borrow 40,000 against that, and then now I go buy $40,000 worth of Bitcoin, thereby increasing my exposure of Bitcoin from 50,000 to 90,000. That's what's happening. It's not this Bitcoin ETF rally, because if you look at the actual data, you can clearly see that there's only $2 billion of buying pressure against an asset with a market cap of $1 trillion that is that has about $300 billion of liquidity associated with it. Again, defined as BTC that has moved within 1 year. If you just do the math on that, guys, you'll see that 3 does not impact 300 by the order of magnitude that's being described. So, like, what is actually driving the Bitcoin price increase? It's a narrative play. I think what you've seen historically is that price goes up, price goes down, and then people try to fit a narrative to that price action. It's not necessarily a narrative that drives price action. It's more like price action, then the user community, crypto Twitter, whoever it may be, tries to justify that price through some movement or through some narrative that they're trying to push. In this case, like you can see, it's pretty obvious. You know what I mean? Like Bitcoin rose nearly 10% to 53K this week, driven by ETF inflows. Guys, I would like take this with a super grain of salt. I don't think Bitcoin increasing 10% to $53,000 is a function of ETF inflows. Bitcoin's price action is really a function of speculation, because $2 billion of buy pressure does not impact an asset that has $300 billion of liquidity that you could buy or sell against. Putting like the dormant BTC aside, just proceed with caution. I mean, I'm not dumb enough, and neither you should be dumb enough to like trade against the narrative. Famous quote that I forgot who said it. Maybe it might have been Buffett. Could have been anyone, but markets can stay irrational longer than you can stay solvent. Like there's clearly buy pressure, clearly leverage pressure to like go long on Bitcoin. Do it, but like reject the idea that Bitcoin's price movement is as a function of the BTF inflow. It's not like it can't be. It can't be, because you're not getting $100 billion of buy pressure against an asset that has $300 billion of liquidity. You're getting two. So do the math. But that's part one. So part two, I saw in like the latest Pantera newsletter. You guys check it out. Pantera is like a private investment. They're a VC firm. I mean, that's probably the easiest way to describe it. They're pretty popular on crypto Twitter. They publish a newsletter every quarter that just outlines the state of like the Bitcoin like ecosystem, crypto ecosystem, why price goes up, why price goes down. So what they've recently published is speculation on the BTC price movement as a result of the upcoming halving, right? So what is the halving? I should really get better at like having this organized, guys. My bad. So the Bitcoin halving is when block subsidies get cut in half. Where the hell is it? Halving. Sorry, guys. I'm gonna go up. I think I drank too much coffee today. Fees per transaction, Bitcoin 30-day average, DeFi to Ethereum market capitalization. Bitcoin activity is picking up. Transaction fees as a result of ordinals inscription. That's just a function of like Bitcoin, the blockchain's like limited throughput on transactions. I think it's like 7 or 8. Jesus, where did it go? Here it is. Bitcoin halving impact. Okay. Halving impact on price. Here's the pitch. Having efficient market theory would hold that if we all know what's going to happen, then it has to be priced in. Paraphrasing a line attributed to Warren Buffett on the dogma, the markets are almost always efficient, but the difference between almost and always is 80 billion to me. Thus, even if we think everybody knows something, it doesn't mean there isn't a ton of money to be made. Okay. Cool. So you can see if I look at if we let me zoom in on this. It's basically the impact on BTC's price before each happening and then after the happening. So what is the happening? Okay, the happening is where miner subsidies get cut in half. That's what it is. So miners mine blocks, they verify transactions on the Bitcoin blockchain, and for that, the miners are rewarded with a subsidy, which is BTC, right? If you like watch Bloomberg Crypto, they try to describe it as miners solving complex math problems, and the miner who solves the math problem first gets rewarded with the subsidy, which is Bitcoin. In reality, what's happening is like most Bitcoin today is performed on mining pools. So like there's very few individual miners. Most of the mining is like I join slush pool with 10,000 other miners, and then our compute power is aggregated into like one mining team. And then when a block subsidy is issued, the reward is pro rata the compute power that you contributed to that mining pool. So let's say you get a block reward of 6.125 Bitcoin. You, the individual miner, are not going to actually get 6.125 Bitcoin. You're going to get like 0.00000003 because the compute power you contributed relative to the overall compute of that mining pool, it's very little. Setting that aside, that's like that's what miners do. They verify transactions on the Bitcoin blockchain. They post those transactions to the network. Other miners agree with that transaction, and once there's consensus on the blockchain, the Bitcoin protocol rewards the miner who verified that transaction with a subsidy. That subsidy is getting cut in half. Cool. So how's it getting cut in half? I think right now the subsidy is yeah, 6.25 BTC per block. Cool. So I verify a transaction on the Bitcoin blockchain. I get 6.25 ETH, or my pool gets 6.25 ETH. Approximately April 20th, 2024. That's funny. The subsidy is going to get cut from 6.25 to 3.125, right? So, because the issuance, which is the amount of BTC entering the network, is cut in half, the theory is that less dilution occurs, therefore, the BTC price increases. So, let me try to explain this again. I'm doing it in real time. We can do it another way. If every time a block is verified, 6.2 6.25 BTC is given to that miner, the network is diluted by all of the Bitcoin holders are diluted by 6.25 BTC. Now with the halving effect, instead of being issued 6.25 Bitcoin, now you're only going to be issued 3.125 Bitcoin. Therefore, the percentage of dilution you as a holder will experience for every block reward is cut in half. Therefore, the dilution goes down. Therefore, the price of BTC goes up. That's the narrative. And if you look at this chart, you can actually you see that when the halving occurs before and after, that there is usually some upward price movement on BTC, the asset. So the question you have to ask yourself is the Bitcoin price movement a function of the halving, or is it just a coincidence? Did one cause the other, or is there just a correlation between the two? Again, my theory is that it's just a correlation. Like the Bitcoin halving doesn't actually positively impact the price of BTC. Because look what happens on each halving. You know what else happens in 2012, 2016, 2024? Those are the years when BTC block issuance has been cut in half. You know what else happened on those years? An election. 2012, 2016, 2020, 2024. Right now, we're going through an election. And what do presidents want during an election? They want their citizens to be happy. They want the plebs to be happy so they don't riot and they get a second term. I hate to say it, but dude, you can just look at the data from like S&P 500, stock market performance on election years. It doesn't go down. It doesn't go down. Moreover, you can see that there's a high correlation of like BTC, the asset, to the S&P 500. So like, what does that mean? When the S&P 500, SPX or SPY goes up, Bitcoin goes up. Bitcoin maxis hate it when you tell them that, because it implies that Bitcoin is not like a unit of account, a store of value, the next generation of money, but rather an asset that like investors trade, arbitrage, so on and so forth. I believe that Bitcoin is a store of value and a unit of account and all that great stuff, but I'm also a realist, and I acknowledge that when when the US stock market goes up, Bitcoin goes up. When the US stock market goes down, Bitcoin goes down. It happens like clockwork. So what happens in 2012, 2016, 2020, 2024, stock market goes up, it's an election year. Bitcoin goes up, it's an election year. Now, does the halving have some impact on BTC's price? I'm sure it does, but like this is the conceptual activity that you have to think through. Why? Okay. Block rewards get cut from 6.25 to 3.125, thereby the dilution to existing BTC holders goes down. But what about the flip side? Miners have fixed operating costs. These operating costs are overhead with respect to their mining rigs, most primarily in the form of electricity. It's primarily electricity, let's be honest, it's electricity. A lot of miners during the last bull run went leverage long on their hardware, so they would buy hardware, take loans against it, buy more hardware. What comes with loans? Payments, debt service. So miners have and then there's also payroll, which is like the human capital associated to like operating the rigs. You can just take that, put that aside. It's like it's a small cost with respect to the overall operating costs of property, plant, and equipment that TradFi boomers like to call it. Okay, so you think about this logically. Bitcoin miners have a fixed operating cost with respect to everything I've described, and the reward for mining goes down. So on one hand, you can say, okay, the dilution goes down because Bitcoin, the blockchain, is issuing fewer Bitcoins per block as a reward. But conversely, miners' operating cost doesn't go down. It stays the same, right? If it costs $20,000 a month to mine Bitcoin at 6.25 BTCs per block, it's still going to cost $20,000 per month to mine Bitcoin at 3.125 BTCs per block, right? So what happens? Either Bitcoin has to go up or miners have to sell more BTCs to offset their operating costs. My theory is that in the absence of like rapid price depreciation with respect to Bitcoin, the asset, miners are going to sell more Bitcoin to cover their fixed operating costs. So, what does that mean? Bitcoin block subsidies go down as a function of the halving, but miners sell more BTCs from their reserve to cover fixed operating costs. So if you're a miner and you're selling 1 BTC per month, you're still going to be selling 1 BTC per month, but you're only going to be collecting 3.125 BTCs. At some point, the miners are going to be cash flow negative. This is where it gets kind of quasi or wonky. And they're going to have to sell, instead of 1 BTC per month, they might have to sell like 1.1 BTC per month. The only scenario where this is not true is if Bitcoin goes up in price. So let's say if I have $60,000 in fixed overhead and BTC is $60,000, I could sell 1 BTC per month. If Bitcoin goes on a rip and goes to $120,000 USD and my fixed operating cost is $60,000 USD, then I only have to sell 0.5 at BTC, right? So it's a balance for sure. But this idea that the halving is the reason why Bitcoin goes up, I would take that with a grain of salt, guys. I would be like extremely speculative on that, given that the halving also falls on election years and presidents want their constituents to be happy during election years. That has more of an impact. The Federal Reserve's ability to like control the stock prices through like interest rates probably has more to do with BTC's price than the halving. I hate to say it as a DeFi guy, man. I love crypto, but that's something I have to consider. So we put this all together, the Bitcoin ETF and the Bitcoin halving. What is our summary? The summary is that Bitcoin ETF, $3 billion of inflows against a $1 trillion market cap with $300 billion of liquidity, does not measurably impact price movement. The Bitcoin halving, although the block subsidy is cut from 6.25 to 3.125, uh, it is not really going to move the needle because Bitcoin miners have fixed operating costs that at some point will compel them to dip into their reserves if they cannot generate enough Bitcoin to cover those costs. And Bitcoin's halving always takes place during an election cycle. So you might say to me, John, Bitcoin's price is going up. You're totally wrong. I don't think I'm wrong on like the rationale of the Bitcoin ETF's limited impact, as I've described, as well as the halving. But I do think like these are two incredible narratives that will have positive price action on BTC the asset. So it doesn't make sense to trade against it. But the one thing that I hope like these listeners take away is that when you are listening to someone telling you that, oh, Bitcoin's price action is a result of the Bitcoin ETF or the upcoming halving, you're being told a narrative that is attempting to justify the price action without the supporting data to prove it. I actually think the price action of Bitcoin is a function of leverage positions and institutional traders just trying to go leverage long on Bitcoin, but we can save that for another day. So if you like this, if you agree with this, actually, if you don't agree with this, I want to know why. You put it in the comments. I'll respond to you. We can have a pretty compelling dialogue. Otherwise, we'll talk next time. Cool. Thanks, guys. See ya.